Good morning, everyone. Welcome to Windsor Brokers live daily market outlook for Tuesday, 30th of October 2012. Apart from the hurricane in the United States, the top news this morning, as well expected, was the release of Bank of Japan monetary policy as the bank expanded its asset purchases by 11 trillion yen, equivalent to 138 billion US dollars, against the forecast of expansion of 10 trillion yen, easing monetary policy for the second straight month amid the heightened pressure for bolder action to fight deflation and support an economy on the cusp of recession. The central bank also decided to create a new scheme to offer cheap long-term funds to the banks, setting no cap on the total amount to be offered. As said, the central bank pledged to pump 91 trillion yen through its asset buying and lending program, its key monetary easing tool, with the 10 trillion yen set aside for buying government bonds. The remaining 1 trillion yen will be for purchases of commercial paper, corporate bonds. As widely expected, it kept its overnight core rate target unchanged at a range of 0 to 0.1% on an unanimous vote. The Bank of Japan, will release its twice yearly economic outlook. I think it's already been released. We're going to take a look later into this. As immediate reaction, dollar was pushed significantly lower as yen hit fresh highs against US dollar at 79.27, easing its extending its recent easing of 80.37 fresh high posted last week, after breaking important 79.50 base that kept basically downside protected in past 2 days. With more negative tone now seen in the near term. Euro is significantly higher at the beginning of European session after 128.85 near-term base still holds the downside, and the bounce above 129 is currently testing levels approximately 129.45, with the cable slightly being higher this morning of its recent lows at 160.05 posted late yesterday. 160.60 is under pressure now. Fibonacci resistance and moving averages. I would say at least of levels at 161.00, where is also the trendline resistance, would provide some relief for the pair. Otherwise, quite high risk is seen on retest of important 160 level that will confirm the major recovery of recent peak at 161.42 and refocus downside supports at 159.75 and 159.11. Dollar Swiss, as dollar is weaker at the beginning of European session, is losing traction, currently testing its initial support zone at 93.30 after failure to clear 200 days moving average at 93.87, and now pointing lower with weakening near-term structure, seeing more risk towards the downside. Of course, the commodities slightly benefited this morning on the weaker dollar. Crude oil bounces December contract to 85.75 so far, following yesterday's break below 85 and 84.90, supports at hitting 84.67 on increased fears as the Hurricane Sandy closes most of the refinery plants and decreasing the supply as well as demand for the crude oil. But this morning's fresh dollar's weakness pushes commodities higher. Still, the crude oil is still within the consolidative range, with more focus still seen towards the downside due to weak near-term studies, while gold is still in the consolidative range above 1700. Support with 1720 as initial barrier still being intact. Yellow metal currently trading at 1712. A brief look at United States. Most likely you are all informed following on the news. Sunday, one of the biggest storms to hit United States, hit it East Coast in early hours today, flooding large parts of New York City and bringing transport to a halt and interrupting the presidential campaign. Also, more than 5.5 million people were left without electrical power, with some casualties. I'm not sure about the number, how many people were killed, as the storm crashed ashore the East Coast late yesterday, and hitting initially gambling resort of Atlantic City, New Jersey. More than 1 million people across a dozen states were ordered to evacuate. Of course, you can see this in all the media. Just to mention that Chicago Mercantile Exchange closed part of its duties as the New York Stock Exchange is shut, and equities are trading in the limited hours, closing at 8:15 Chicago time, which is equivalent to 3:15 local Cyprus time or 2:15 European time. Today's calendar brings us some more activities. As said, the Japanese data have already been released. UBS consumption indicator, we don't have, I do apologize for the calendar. We have some technical problems, and basically we're working on a completely new calendar, so that's going to be implemented the soonest possible, and we will avoid all these problems with the numbers and the missing numbers and whatever it is to happen. Said Swiss, if you give me a second, I want to find it. Swiss UBS consumption indicator, that was this is the release for September. As the previous month was 1.03, today's release at 1.07, slightly above the expectation. German unemployment change that is due at 10/8/55. It's still to be released, and of course Spanish GDP that came at -0.3% compared to -0.4% forecast in the previous release. Slight improvement in the third quarter, with the German unemployment rate and unemployment change still due to come at 8:55 GMT. Unemployment rate is expected at 6.9%, and the unemployment change at 10,000 compared to 9,000 in the month of September. From UK, realized sales for October, we don't have forecast. Previous release was at 6, and then we have a series of data from Canada, starting from retail price index for September, that is expected to decrease to 1.2% compared to 3.4% in the month of September, with the raw material price index. We were talking about this, I do apologize. Raw material price index minus no forecast for this. Pardon, the raw material price index monthly is 1.1% compared to 3.4% in the month of August. Producer price index for September 0.1%. I think we have some major problem in this calendar. Anyway, data from Canada and from United States consumer confidence for October is expected to increase to 72.4 compared to 70.3. This is one of the most important releases for today, and we have to put the highlight on this. This is due at 1400 GMT, while Canadian data are 1230 GMT and 1300 GMT. Home price index for September 1.9% compared to 1.2% in the month of August. I do apologize. And we're going to take a quick look now at the currencies and commodities and see the latest movements and expectations for the major currencies and, of course, commodities. As said, the euro is attempting to base at 128.85 zone, This is also the main bull trend line drawn of 120.42 low that is so far offering. There were a few dips below, but failure to hold against below, hold the losses below, still keeps this as valid support. This morning bounce on the weaker dollar against levels at 129.45.50 zone, retracing approximately nearly 50% of the near-term down move from 130.21 to 121.28.81 last week's low. However, the outlook is still, the downside is still vulnerable, as despite improving hourly studies that are bouncing higher and evident presence of fresh momentum is seen on the hourly chart, the 4-hour outlook is still rather bearish, as most of indicators are holding below their midlines, although started to point higher. To avert immediate downside risk, we need to see a gain of approximately 129.79, which is the main bear trend line drawn of 131.38, and then comes at 130.00 as psychological and round figure resistance, and of course the 130.21 lower top of 25th of July between 50 and 61.8% retracement required to confirm the near-term base at 128.85 and turn focus towards the upside levels. Otherwise, any failure under the trend line or 130.00 will still risk a lower top. As said, the negative tone that dominates on the 4-hour and the quite negative daily studies that are still descending see risk of break below 129, 128.85 near-term base and the trend line support, and the slide towards a very important and strong support at 128.30, 128.00 zone, where we have the 200 days moving average and the double bottom at 128.00, 128.25. With the sterling, again, brief corrective action following extension of the pullback from 161.42 last week's high to 160.05, approaching our important psychological support. We mentioned in our yesterday's comments that the downside remains vulnerable and the risk increased of revisiting 160.00. This is approximately 61.8% retracement of the entire uplift from 159.11 to 161.42 with subsequent bounce and the fresh strength seen at this morning, regaining levels at 160.60, approximately 38, 160.60 approximately. It's there is the 55 days exponential moving average on the hourly chart, with the hourly indicators starting to point higher, but at this point I would say the still lack of stronger momentum. As we can see, the momentum is already starting to move sideways and pointing lower, and MACD is still holding below the zero line, with the 4-hour studies, 4-hour indicators, and the MACD is currently below the midline, with the slight improvement seen on the stochastic and the RSI that are pointing higher. Still need to see break above 161 zone, where is the main bear trend line of 163.08, and again of 161.02 to confirm the near-term base and the higher low at 160.05, and actually to prevent pair of further sliding and avert downside risk towards 160.00 and possible break lower, and break about 161.42 to open next significant barriers 161.78 and 162.00. However, overall picture is still quite bearish, as the pair remains in the downtrend from 163.08, with a good support found at 159 zone, where the recent fresh strength has emerged, but again unable to clear the main bear trend line, still keeps the downside vulnerable. Currently 55 days daily moving average at 160.16 currently underpins the underpins the action, but break above 161 as initial barrier is seen required to confirm the near-term bullish stance of 160.00 and reattract 161.42, seen as a break point for 161.78 to 161.02. Still quite weak tone seen on the 4-hour chart. Again, as said, requires a break above 161. Otherwise, loss of 160 level will risk 159.74 and probably 159.11, our key near-term support. And dollar yen dipped on this morning's announcement from Bank of Japan after initial jump higher above above 80.00 that hit 80.13. Fresh weakness, fresh reversal occurred immediately lower, and the pair dipped so far to 879.27. Important was a loss of 79.50 base that now opens way for possible further retracement and increased risk of revisiting important 79.00 round figure and psychological support, as the pair dipped to 79.27 so far, and the 4-hour indicators are now are moving into the negative territory along with the hourly ones, keeping the downside more vulnerable for possible test of 79. As said, a break below 79 would be quite risky, as it will confirm the temporary top at 80.37 and open way for a further easing towards levels at 78.60 is the next significant one. To avert immediate downside risk, we need to see regain the regain of levels above 80.00, probably a break above 80.13 days high in order to refocus 80.37 and possibly extend the recent strength of 77 base that so far peaked at 80.37. Significant was dip below 200 days moving average that was reinforcing the 79.50 base. Today's close will give us more clues. Close below 200 days moving average would be definitely signal for some further easing and weakening the current structure, while close above this level and probably close above 80.00 is to signal fresh strength above 80.13 and 80.37. That will open our next target important level at 80.65, 50% retracement of a larger 84.17 to 77.12 descent. Dollar Swiss said losing traction after several attempts to clear the important 93, 87, 94.00 barrier, where is 200 days moving average that so far keeps the upside limited. Moves lower at the beginning of the day after upside attempt failed at 93.73 this morning. Fresh low has been posted at 93.33, testing our initial support levels. Further easing risks test of 93.26, 55 days moving average that currently moves sideways, while 20 days one on the 4-hour chart started already to point lower, and then we have important supports at 93.20 and then 93.00 Fibonacci supports, 38.2 and the 50% retracement of the entire upleg from 92.13 to 93.85, loss of which, especially the 93.00, would signal further weakening of the pair and keep the upside barriers protected. Conversely, any reversal above 93.20 will be seen as a base for fresh attempt higher. Break above 93.87, 200 days moving average at 94.00 as a round figure resistance to open a more significant double top at 94.36, 94.30. That will allow for extension of the current, but actually it will signal a break above the congestion that is that has started from mid-September, and it's limited on the upside at 94.30, on the downside at 92.13. This also is reinforced by approximately 23.6% retracement of the entire down move from 99.70 to 92.13, and the descending daily 55 days moving average that's currently at 94.30. So a break of the cluster of barriers between 93 and 93.30 is required to signal near-term base at 92 zone and the open way for a stronger recovery of 99.70 to 92.13 descend and to refocus 95.00 as our next barrier psychological resistance and 38.2% Fibonacci retracement. Need to mention that any failure to clear or regain 94.30 zone will still risk a further range and sideways movements as we are within the range since mid of September, and break of either side basically is to define the near-term direction. Basically the negative, still negative tone seen on the daily chart, indicators are holding below their midlines, and any failure to clear 94.30 barriers would risk further easing as the 200 days moving average now offers initial resistance along with the descending 55 days one that is close to it, and that already crossed below 90 days one that is currently standing at 95.50, keeping more pressure towards the downside. Break above the range and the congestion top is seen as a supportive element, while failure to break it will be a signal of further congestion and further sideways movements within 92 to 94 barriers. And crude oil, as said, its daily structure is still showing the quite strong downtrend of 100.72 as the third wave from 93.50 so far extended and posted fresh lows at 84.67. This is the low of yesterday, following the news from America that pushed the price even lower, denting the strong 85.00 barrier. 20 days descending, 20 days moving average on the 4-hour chart maintains the keeps the upside basically protected for now, with no significant potential seen on the any stronger recovery as initial barrier lies at approximately 86.70, 87 zone, with the regain of a previous low at 87.70 and 88.00 as 38.2% retracement seen as improvement. Otherwise, anything below this would be just seen as a consolidation with the possible extension down towards below 84.67 to refocus our next target at 83.64, and as we mentioned, the projection of the third wave down to 80.50 seen on a break of 83.67. And finally, gold daily Ichimoku studies are still showing, I would say, mixed at this point, as the pair is still within the range. Basically, the price holds below the cloud, but which is indicating the downtrend, but it's holding above Tenkan and Kijun-sen moving average lines. That is indicating the uptrend. Basically, the price is currently congested. I do apologize. We are in the wrong. I do apologize. I think it's quite a similar situation with the Ichimoku studies on gold. The downtrend is still active, but currently the pair is the gold is attempting to build the base at 1700, consolidating the recent losses that dipped to 17.00 off 17.95 fresh yearly high. The downside is protected at 17.00, with upside the peak still short of 17.20, our initial barrier at 17.18. These are the recent peaks. This is the one from last week, with 17.20 seen as initial resistance, 55 days moving average, and the 23.6% retracement still staying intact. The hourly structure is still in the neutral mode as the price moves within approximately 20 pips range, while 4-hour indicators are gaining momentum but still lacking strength to clear 17.20 as initial barrier. On the Ichimoku studies, approximately, as I said, mixed things on 4-hour. Price holds below the cloud but still above the moving averages. That is still giving no direction. Daily Ichimoku also indicates indecision and sideways movements as the pair is moving within 20 pips range and is moving within the daily cloud. Break of either side, initial barrier at 1720, and I would say more significant would be a break above approximately 1750 level, where we have lower top at 1753 of 17th of October, and between 50 and 61.8% retracement is to improve the current structure and turn focus higher. Conversely, loss of 1700 is to open initial Fibonacci support 50% at 1693, and more significant 1670, 1660 cluster of supports, Fibonacci 61.8%, 90 days moving average and 200 days moving average. That will be seen as the next target on a clear break below 1700 support. That was all from me for today. Please, your questions, if you have any, you can submit them now. Okay, no questions for today. In this case, I will thank you all for being with us. Expect to see you again tomorrow morning at the same time at 8 o'clock GMT, when our regular English session starts. 1 hour after, we will have the Arabic session. Keep an eye on the market, especially on the news from United States, as some markets, electronic trading at least, the floors will be closed. Wish you nice Tuesday, and of course very nice and successful trading. Good luck.